Hello, everyone, and welcome to Alternative Design's presentation of Marketing Magic with MLCDs. I'm Tim Harding, Chief Marketing Officer for Alternative Design, and this webcast is coming to you from a remote location. As many of you have deduced by now, we have had a rather massive failure of technology in the Alternative Design offices. We have lost our capacity to access the internet, thus necessitating my move to someplace where I could steal some Wi-Fi and get the webinar done. We've also lost the use of our phones. At this point, we're uncertain when everything will be restored. We're hoping, of course, very shortly. So if you need to get a hold of your business consultant, most of us have our phones set so that the phones will ring through to the cell phone in the event the phone on the desk isn't picked up. So you could go ahead and use the same numbers. Or if you have our cell numbers and you need to get a hold of somebody, please don't hesitate at this point to call the cell, because the best thing that's going to happen to you if you call the office number is you're going to get rolled into voicemail, and we're not even sure we're going to be able to retrieve voicemail from when this is all done and taken care of. So I know it's what we call Crunch Week, which is the last week before the offerings from the banks close. This is a critical time, a really bad time for the technology to shoot us in the foot. But we are on cell phones, and Chris is also working from a remote location, getting everything prepared so that when we hit the closing dates here, we'll be able to get your business through and make sure that you get paid in a timely manner, and because our objective from day one. So once again, it is a crunch week. If you need to get a hold of somebody, please access the cell phone. If we don't respond to an email from you promptly, it's because we can't, because we haven't seen it. So with that, we'll proceed along with today. I'm going to, as always, take questions at the end of the presentation. If you have questions during the course of the webinar today, feel free to go ahead and type those into the chat box on your control panel at any time, and then I will respond to all of the questions at the end of the webinar. So with that, let's move on. What I want to talk about today is marketing magic, but it's because the opportunities that you have to get in front of qualified buying units has never been better. And I think in talking to agents today, one of the things that we found is that many agents don't see the real opportunities for market-linked CDs because they're used to only looking at a small segment of the potential marketplace. And so I'm going to talk today a little bit about looking a little deeper in those marketing opportunities and looking at doors that having an FDIC-insured product in your toolbox will open for you. So we're going to hopefully show you some marketing magic and put you in front of people that you wouldn't have gotten in front of before and make sales that you possibly would not have made before. Now, there's an interesting opportunity now that I keep hammering home over and over. And for those of you who are, regular participants in our Wednesday webinars, I apologize for repeating myself again and again, but I don't think this point can be overemphasized. A recent study by one of the larger asset managers in the country, BlackRock, found that of the investable dollars in the United States, 48% of it in cash. I mean, that's amazing when you think about it. Of the available investable dollars in the United States, almost half of it is on the sidelines. On the sidelines probably for two primary reasons. Number one, safety. Be concerned. We've had some serious market corrections in recent times, and many advisors are predicting that there'll be some more coming. And of course, I'll go out on a limb and say I agree with them because we all know there will be a market correction. What we don't know is when, and what we don't know is how severe that correction will be. I mean, as renowned as Jack Bogle predicted, as many as 2, not 1, but 50% corrections over 10 years. Those of us who are baby boomers and fast approaching, the retirement stage of our life can't afford another setback like that. So there's almost 13 trillion, actually just a little bit over $13 trillion sitting on the sidelines in cash right now. Reason number one, for safety. Number two, liquidity. We have solutions for both of these concerns. But the big thing to keep in mind is no matter how you spell safety, there are a lot of folks out there sitting on a lot of cash that spell safety FDIC. And I know I've said this before, but it's a huge opportunity to capture some of those assets. And the first time, you can get compensated on capturing those assets. It's an opportunity right now that was never there before. Market-linked CDs, in many ways, offer the perfect solution to those people who are putting money on the sidelines. And I'm going to talk about some of the ways that you can position this product in front of these prospects in order to capture your share of those investable dollars. But for many of you, it's going to take a little bit of a paradigm shift. You have to look at your practice a little bit differently than you have in the past. You're going to have to recognize and identify some things that were important before. In fact, in many cases, were irrelevant. If I can illustrate the paradigm shift, their story, San Diego is a Navy town, and there's a story about a battleship in the fog, and one sees ahead the light of another ship. Collision course. He, of course, notifies the captain, who instructs the signalman to send out a signal. The signal is your course to starboard. This flashes the signal. Signal comes back from the other end of the water. You correct your course. Captain, a little bit annoyed. The signalman to send another signal. This is the captain. All to the starboard. Comes back. In first class, you alter your course. Now the captain is really annoyed. It's the signalman to send another signal. This is the battleship USS Missouri. Course to starboard. This comes back. Mouse. Then we call a paradigm shift. A new way of thinking. A new way of looking at things, which will cause us to react in different ways than we had intended to. Now, what I want you to do is picture all the people that you potentially know who are CD investors. Oh, and yes, some of them are your clients, and some of them haven't even told you that they have a significant portion of their assets in an FDIC-insured account because they didn't feel it was relevant to the conversation you were having with them, because you never had a product that was FDIC-insured before. But if you think about it, you want to target CD investors, but you need a tool to open that door. FDIC-insured product will give you a conversation starter with CD investors. Why do you want to get in front of them? Because by definition, they have investable dollars. They have liquid assets that are sitting in a banking institution, and you're not getting paid on it. Talk to CD investors about FDIC-insured market-linked CDs is going to open up treasure chests of money that you didn't even know were there before. Investors are, at least with a portion of their assets, conservative investors. So they're a perfect match for your other product lines as well as market-linked CDs. I mean, think about it. I know many of you represent yourselves as safe money specialists because you utilize our market-linked CDs, but also indexed annuities and fixed annuities, which are considered by most of us be safe money products as well. CD investors are the kind of people that are attracted to CDs and FIAs. You have to get the conversation started, and using the FDIC card is a good way to do that. It will create for you multiple cross-selling opportunities, because once you've made a prospect a client, you have a relationship to build. In building that relationship, you can educate them over time to the value and appropriate use of your other product lines. You know, I had an interesting situation this past week. I have some two agents who are brand new with alternative design. They've never sold a market-linked CD before, but they had a client who had money in an IRA, simply refused to put anywhere but an FDIC-insured account. What they had to say or what they had to offer, it had to be FDIC-insured. And they said, well, you know, we have an alternative for you from on the corner that you find more attractive. And he said, well, I don't know. The bank on the corner gives you some guarantees. First of all, they guarantee that they're going to return my principal at maturity, so I know my money's not at risk. Hey, this is my nest egg. I can't afford to lose any of this money. And the bank also guarantees me a return. To them, this is true. The bank will guarantee a return of your principal, and will guarantee that you won't make less than the declared rate, which in his case was just a little bit over 1%. But there's a third guarantee that the bank is also making to you that you're not mentioning. And the third guarantee is that you don't make any more than that guaranteed rate. Now, by contrast, you might want to look at a different product line. Of course, all of this is wrapped in the FDIC insured wrapper, but so are market-linked CDs. Look at the table right away. They're both FDIC insured, so there's no difference there. But there is a big difference. You see, market-linked CDs can't make you those same three guarantees. They can only make two. Market-linked CDs can only guarantee a return of your principal at maturity, and only guarantee that you won't make less than minimum guarantee, but they can't guarantee that you won't make more. You might. In this particular instance, we had the Goldman Sachs 8-year linked to a basket of 10 stocks with a minimum guaranteed return of 1.5%. With the 5-year Joe CD that this gentleman was looking at. He'll make up to the cap of 5.5%. I just wrote their first case. So if they're listening in, congratulations. Excellent job. And, oh, by the way, it was a nice, tidy $182,000. Simply by putting a market-linked CD into a traditional CD and pointing out that third advantage. You know, 2 out of 3 ain't bad. You might make more. Now, another opportunity for you is with to have money in it currently. And as we all know, that depending on which measurement you look at, last year in 2013, the market was up 25%. But a correction coming. The problem with having money invested in the market is that capture those gains. And unless you lock up those gains by getting out of the market, you risk giving some or all of it back in market correction. We'll take advantage of the fact that securities investments are up from the end of last year. Let's lock up those gains. Can't be taken away. Correction. But then the response is, yes, but the market keeps going up. Miss out on that. Well, there's a couple of answers to that, but what we're really talking about here is correction protection. In other words, putting a safety net or a floor underneath investments to make sure that you don't give back you had gained over 2013. I think, the perfect vehicle for the person who the idea of capturing their gains and locking them up, but doesn't want to give up exposure to the market. In Morningstar Ultimate Stock Pickers CD. Of course, I talk about this one all the time, but I'd like to put it side by side with a mutual fund. I mean, if you look at this thing, it's absolutely a marvelous product. It's a 6.5-year point-to-point product, has 110% participation in the growth of the index in that point-to-point period, no cap, no limit to the upside, and it's linked to the Morningstar Ultimate Stock Pickers Volatility 7% Index. And I talk about this index all the time. It's a very uniquely structured proprietary index. Morningstar, of course, is in the business of analyzing portfolio managers, analyzing money managers. They've done it decades now, and they're probably the best in the business at it. So what they have done is they have taken who they believe to be the 26 best portfolio managers in the United States, and then they have created a proprietary index that reflects positions that portfolio managers have in the money that they manage. I mean, think about it. It's almost like having a committee of 26 of the best money managers in the country manage your money. Oh, and did I mention that this is an FDIC-insured product? Can't lose principal, but a no-cap upside market index that's determined by what the best portfolio managers in the country are doing. Heck of a product. In 2013, it was up 15%. I know that's not full market return. It's not designed to get full market return because it's principal protected and guaranteed if held to maturity. You don't get full market upside if you don't take full market risk on the downside. It has no downside risk if held to maturity. And the list of the top 26 money managers, according to Morningstar, yes, there's some big names in there. Oppenheimer. And that guy, Oracle, Buffett. Yeah, Berkshire Hathaway is in here too. Folks, wouldn't it be great to invest in a mutual fund that was managed by the top money managers in the U.S., but you were guaranteed to get back no less than your principal in 6.5 years and capture all gains above that? This heck of a product for people right now who would like to lock up the gains that they have achieved over 2013, put them in a place where they can't lose those gains and still give them upside market potential that the bull market continues. Here's the thing that I like to preach. It is that sometimes, folks, an annuity just won't work. It's just not the appropriate solution. It's just not going to work. And I've done other webinars on, when an annuity won't work, and I've written a white paper on when an annuity won't work. There's at least half a dozen times when, no matter how hard you try, you're not going to make that annuity sale at that point. Most are conditioned to go, oh well, and walk away. Paradigm shift again. Instances. A market-linked certificate of deposit, a comparable product that we offer, and walk away from there with a sale instead of walking away empty-handed. And I've gone through several different scenarios where that could be the case. There are also places that we have never perceived as potential markets for us to penetrate because we didn't have the right product. Very often you'll come across individuals who control rigid funds. The monies that can't be just anywhere. They're restricted by law or control. Very often you find money like this in court settlements where the court has decreed that only an FDIC-insured account is acceptable. Could a custodial account for a minor. Lots of circumstances here where no talk about annuities or assets under management, but they can talk about an FDIC-insured product. We'll have an opportunity with other trusted advisors. It's very difficult to persuade other trusted advisors on the value of annuities. There's enough bad press out there and enough skepticism that many trusted advisors don't want to walk within a mile of making a recommendation on an annuity. But insurance, they understand. Showing them a way to get a higher return for their clients and prospects might be just the thing to set up a continuous stream of referrals. And we have agents across the country now, one in particular, who works almost exclusively with CPAs market-linked CD side. And we can share more about that at some future date, but there are lots of ways to start building relationships with other trusted advisors like CPAs, attorneys, who can be a very, very good source for you because they know you've got a product that they can identify with. Now, we talk about it all the time here at Alternative Design, always finding new pools of money that are great candidates for the market-linked CD for a variety of reasons. And I've talked about some of these before on other webinars. As most of you know, we're doing a fair amount of business with trust companies. Those are independently owned trust companies, not trust departments from banks, but independently owned trust companies, and we're bringing in literally millions of dollars every month from our relationships with these trust companies. I talk about homeowners associations all the time because many of them are sitting on substantial pools of money, substantial reserves that are designated for long-term pairs, and they very often are restricted by their bylaw to investing those monies only in FDIC-insured accounts. There are some big cases available through homeowners associations. Professional fiduciaries who are watching out for the affairs of others also have dollars to invest on behalf of their clients. And of course, nonprofits like churches, charities, foundations. These are all very conservative investors. These are all people to whom the MLCD FDC insurance donates. These are likely folks that an annuity isn't going to fit. Assets under management might not make any sense. Conservative FDIC insured investment like a market-linked CD, absolutely. Institutional investors, of course, we've talked about this in the past. Great opportunity if you have access to a major pension plan or institution that invests. Now, one of the tools that I've mentioned frequently to help you get in front of all of these different opportunities is the entree marketing system. The marketing system is designed to get you in front of trade associations, business associations, professional associations, and yes, homeowners associations, and in front of nonprofit organizations that are often sitting on substantial amounts of money, charities, churches. And the important thing about the entree system is when you get in front of the board of directors of those associations, professional associations, charities, and nonprofits, is the people you are talking to are centers of influence in the community. These are community leaders, high net worth individuals in many, many cases, especially when it comes to the boards of various charities. They're like substantial donors to that particular cause. And of hard-to-reach assets, people that wouldn't talk to you about anything else other than an FDIC-insured product. Now, the entree marketing system is from a third-party vendor. It's not something that we created here at Alternative Design. Therefore, there is a cost associated with it. And frankly, it's fairly bare bones. But what it is, it's a 25-page report on how to get higher returns on certificates of deposit. It has several different topics. It talks about all the different types of CDs available, including market-linked CDs, and gives MLCDs very, very favorable treatment. It talks about the different types of risk. It talks about investment strategies like laddering or barbelling. It talks about qualified money in CDs, how to maximize FDIC coverage. And very importantly, it talks about non-FDIC insured alternatives. And all through the report, the author urges the person reading the report and looking for a way to get a higher return on their CDs to speak with the financial advisor who provided them with the report, because they're just not going to get the information at the bank. The other thing that I like about it is that section on non-FDIC insured alternatives gives you the opportunity to cross-sell into your other product lines. It talks about fixed annuities and fixed indexed annuities and single premium whole life, and as well as structured notes and bonds, but it gives you the opportunity to pivot to other product lines as well and pick up more and more assets. So the Entree system is a great tool for cross-selling. It's so a use kind of tool. You can leave a copy in the waiting area while your clients are waiting to come and meet with you. It will start conversations about CDs because they didn't know that you could help them with an FDIC insured account before. It's a great tool to leave behind after any appointment and start a conversation at the next appointment. I know aides who are using them at senior centers. It's a great way to approach other trusted advisors like CPAs and attorneys, and it's a good tool to start a conversation in the restricted market areas. Now, the other trick to the Entree marketing system is that it comes with one content but 20 different covers so that it can be customized and be used as a target marketing tool by changing the cover. It has, for example, the Enlightened Saver's Guide to higher CD returns, but there's also the Enlightened Homeowners Association's Guide to higher CD returns, the Enlightened Doctor's Guide to higher CD returns, the Enlightened Senior's Guide to higher CD returns, the Nonprofit's Guide to higher CD returns. It's a great way to break the ice and get in front of people. Normally sells for $250. We have a special out right now. If you purchase prior to the end of the month of February, I get it for you for $125, half price. If you have interest in it, be sure and give me a call once the phones are working again, and I'll be happy to discuss how you might be able to use it in your practice and let you decide if you'd like to pick it for the discounted price of $125. One time, and it's multiple use. You can use the over and over and over again. As I mentioned at the beginning, we're coming up on crunch, or we're in crunch week. February cutoff dates are fast upon us. The Bank of the West Commodities Income Advantage product has a cutoff date of 1 o'clock Eastern time tomorrow. Friday, February the 21st. The Bank of the West products on our platform, including the Morningstar linked product, close next day on February the 24th at 1 o'clock Eastern time. And then the Goldman Sachs product, you got an extra day there. It closes on Tuesday the 25th. So always, if you've got potential cases right now, this is the time to jump on them. We'll do everything we can to help you get those cases through the month of February and get you paid as promptly as possible. So with that, I believe there have been a couple of questions. And so if you have further questions at this point, please go ahead and type them into the chat box, and I'll respond to as many as I can. And we'll pull up right now and responding. And Ron notes that it's a great day in Colorado, and I'm happy to hear that, Ron. It's a crummy 74 degrees and partly sunny in San Diego too. So we're right along with you. Peter asks if you need a license to sell market-linked CDs. There is really no license to sell a certificate of deposit. Our agreement with the banks states that we must have anyone that we distribute through must have a regulatory body that has authority over them. They are perfectly willing to accept the insurance commissioners as a regulatory body for that individual. And so we require, as per the banks, that you have at least a life insurance license in order to distribute through us. The question is, what risk is there in market-linked CDs? The risks are spelled out in great detail in the disclosure documents. Every little thing that could go wrong, it looks just like those disclaimers inside, a bottle of Advil. It talks about every potential risk there could possibly be. To me, there is only one substantial risk. That is the risk that someone would need to get out of the CDs prior to maturity, because the only time that a client could suffer a loss of principal. So no one should ever go into a market-linked CD without the intent to hold to maturity. The biggest risk is if they, prior to maturity, they could get back less than their original principal amount. To me, that's the single biggest risk. But as I said, there are multiple risks defined in the disclosure documents for your reading pleasure. Asks, how liquid is the 6.5-year Morningstar linked product? It's as liquid as all market-linked CDs in that you can redeem them or sell them back to the bank at any time. There is no specified penalty for early withdrawal. There is a surrender charge, but here's the rub. The bank will buy them back at whatever the current market value for those CDs is. And that market value could be less or it could be more than the original principal amount. But the Morningstar linked product, just like all of the others, can be redeemed at the bank for whatever the current market value is. And the way that you do that we'll be covering in a subsequent webinar. But the important thing to understand is that if that is something your client needs to do, we contact the bank and we get a quote, and then your client gets to vote whether they're willing to accept that offer or if they would prefer to continue to hang on to the CD. Question from Jim, what's the best number to call me on? Best number to reach me is on my direct line. It's 858-240-2059. And that's rolling over to my cell phone, so I am able to take incoming calls, even though that's my office number and I can't make outgoing calls on it. So once again, this is Tim Harding, and if you'd like to reach me directly, it's 858-240-2059. And Carl asks, how do I request the Entree Marketing Kit? And the answer is just give me a call at the number that I just gave you. Jeff, back in New York, says the Entree system sold. Where do I send my credit card number? And that, once again, I can take that over phone. I can also send you an order form, and you can fax it in on our secure fax. Except that's down too. So the best thing would be to call me and reach me on my cell phone. Tony notes that it's a bright, sunny, warm day in Arizona. I heard it was in the 80s there. I heard it's been nice. Let's see, another question here. Question from Carl. So a good one. How do you feel about the potential for the market to increase enough from today's highs to earn significant interest by maturity date? The important thing from my perspective, Carl, is that you're looking at half-year, 7-year, and 8-year timelines. And the strategy on most of the portfolios or baskets that banks put together is that they are buying what are called large cap, meaning big companies, value stocks, which means these are stocks that have been underperforming. They haven't been trading at a price that would be justified by their market share and by their profitability. And so there is an expectation that regardless of what the market in general does, stocks still have room to go up in value. So that strategy, that would be my response. If you have a client or prospect who feels strongly that we're at a high and the stock market is only going to go down, that's why we put product, which is a dynamic index. I mean, those money managers will try to anticipate a downturn in the market and they will reposition those assets, and the index will then reflect those changes. They will respond. I mean, it's dynamic. It's not a static index like the S&P 500. So we have the Morningstar product that is responsive to changes in the market. We also have commodities-linked products because, as I've said over and over, commodities are the only asset class that have an inverse correlation to both stocks and bonds. So if your client wants to hedge against the stock market falling off, basic hedge would be to have a connection, have a link to a different asset class like commodities. Next month's products come out typically come out the first week of the month. And normally the first Wednesday of the month I have the information and I have our product launch webinar on that Wednesday. But typically they're out the first part of the month. They're on their own clock. They put them out when they want to, but they do get them out. My number is 858-240-2059. That's in response to a question of would I repeat my phone number. And one more time, it's 858-240-2059. Asks, do you need a license to sell the Morningstar? The answer, Peter, is the same as the previous answer. There is no license to sell a certificate of deposit. Market-linked CDs are not securities. They are merely linked to securities and therefore do not require a securities license to be sold. As I said, we do require a minimum of a life insurance license for will allow you to distribute the product, but no, there is no license required to sell a certificate of deposit. Okay, question here from Brian. With the Morningstar product, do you know if the value would be connected to the index at all, or if the value is separate from that and the midpoint redemption would not be associated with the index? Yeah, good question, Brian. What he's really asking is if the index is up and you redeem the CD, do you capture the index gains? And the answer to that directly is no. The market value would be determined by would be a combination of factors. It will be determined by current interest rates and the value of the underlying options on that index. So it wouldn't have a direct correlation to the index. It would have an indirect correlation because obviously if the index is up, value of the options is likely to be up as well. If you need more clarification on that, Brian, give your business consultant a call and we'll be happy to walk you through it. Carson asks another question about the Morningstar product. What's the minimum guarantee? And the minimum guarantee on the Morningstar product is a return of principal at maturity. It does not pay annually. It has no minimum interest guarantee attached to it. It is strictly a 6.5-year point-to-point product. With no annual interest payments and no minimum guarantee. The guarantee is a return of principal at maturity plus whatever gains there are in the index. We've gone a little longer today than I anticipated. I appreciate your patience. Thank you for joining us today. Thank you for your business month. It's been a good month. Once again, we're in crunch week. We're ready to start wrapping things up. So if there's any way we can help in any way, shape, or form, please don't hesitate to contact us. Have a great week. I'll be back here next Wednesday, same time, same place. I appreciate you joining us.